Good morning. It's Saturday morning, November 19th, 2016. I just want to go over a few things. I'll bring up the schedule. This is the remaining live webinar schedule. I sent it out yesterday, but I want to discuss this a little bit here. The seventh session is Tuesday, November 22nd. We're doing this early at 12:30 p.m. Central Time because I have a physical later in the afternoon, and I've had it scheduled for months and I can't change that. So we're going to talk about using HGSI intraday, and we're going to actually do some prospecting with delayed quotes. So that's another reason to do it while the market's open. And so I'll be doing that on this coming Tuesday. And then the next one is Tuesday, November 29th, same time. The ninth session is going to be on December 1st. Usual time, and the 10th session will be on December 6th. Now, I held 10 sessions for the last webinar, and I'm sticking to that because I believe I've covered most of the material, but there's still more to go. We can do a lot in 4 sessions. One of those sessions, I think I'll take a look at IPO entries and so on, and that'll be using the VPOC, or the volume point of control 1010, and then we can also use this 1 or 2 day pullback strategy on that. It works great. Now, we aren't going to have the VPA flags on the most recent IPOs because it takes 120 days of data, but we can still trade those stocks with VPOC. Okay, I'll be out of town for 5 or 6 days beginning December 8th, and then the following Saturday, December 17th, I'm going to do a 2-hour wrap-up session, 10 a.m. Central Time, and I'll answer any questions. We'll review the material and have a trading plan in place by then. We already have the trading plan with the spreadsheet, but maybe just select a few favorite views, filters, and combos to ease the burden of stock selection. I only really use 1 or 2 views the majority of the time, so that's what we'll discuss at that point, or maybe even before that point. Anyway, let's move along. These are the trades that I have taken so far. Now, I just put a $10 round trip on here. I get a little better rate at TD Ameritrade because I've been there so long. Sometimes, or most people have to pay $9.95 per trade. Some of my trades are $5 trades or even less. But on the main spreadsheet, I'm going to use $20 as a round trip. I just used 10 for this example. But let's take a look at these numbers. Fortunately, the trades, I am positive on all of them, which is highly unusual. But all these trades have been done within the last week. The gross profit is a little over $2,000, and the net using $10 round trip is $20.45. Winning percentage is 100, which is highly unusual, as I said. But these are the trades, and these are the gross profit and loss based upon Friday's closing price. I had $1,177 at risk based upon my stops. Some I didn't buy as many shares as I could have, and a few I bought more than I should have, slightly more. But the total risk is $11.77 unless there is a major gap down. So if I divide the 2045 profit by 1177, my risk is 173% return on risk in 1 week. Now that's exceptional and tremendous, but it shows the potential of this method of trading. If you get in the right stocks at the right price, and if they keep moving up, and if they're trending up, more than likely the trend is going to continue. Doesn't always work out that way, but that's the kind of return that I have right now. I think I finished the last webinar series up, I was up 92 or 93% on risk at one point, and I think it ended up in the 60s or 70s. But And that's really good, but this is exceptional. Now let's take a look at the spreadsheet, and this time on the spreadsheet I put round trip uh, fees of minus 20 in here, 9.95 in each direction. Now I know a lot of you traded IB. If I were a much more active trader, I would probably reopen an account there. I really don't like their platform, especially for options. So I closed that account. If I become much more active and do some intraday trading, some day trading, then I will reopen the account just for the commissions. But I like everything about Thinkorswim. It gives me all I want. Now, not that many years ago, I was paying $200+ per month for live data, so I don't mind, paying commissions for the sophistication of Thinkorswim. Anyway, this is where we stand right now, and this is with using $20 round trip, so there's $100 in commission. Now, if I click on the analysis sheet, gives me a different view. I've had 5 winning trades up to this point, averaging $419, profit and loss, and so on. These are the days that I put the trades on. Didn't put one on Wednesday. These are all trend trades, and they're all swing trades. Now, I am not entering this information right now. If when I close the trade, I will, if I have any of these errors, I will certainly enter them. This spreadsheet is very helpful if you take the time to update it and to keep it keep it up to date. I know some of you have purchased it because I talked to the owner yesterday, and he said that several referrals have come in. Let's take a quick look at these stocks in Thinkorswim, and most of these stocks have achieved the 1R level or the 1 reward, and I've moved these stops up appropriately. So on AAOI, if I get stopped out here in this general area, I will have a 1R or 1 reward. Now, if this takes out this alert or this alert right here, then I'll move my stop up, and I will be assured of having a 2R reward to risk. AMKR, this is a relatively new trade. It's one I just put on a few days ago. It's already achieved 1R. You can see that the stop is fairly close here, but I'm following the rules of the spreadsheet. I'm just moving it up. Now, my next area is 1252. It closed at 1209. I could certainly get stopped out of this very easily, but if I do, I will have a 1R profit on the amount risk. AOSL. Now this one has moved up to the 1R level. If I get stopped out here, I will have a 1R reward. And you can see that this stock does not trade a lot of volume at all. In fact, several of these stocks do not trade heavy volume. Let's just go back to AAOI. Look at the average volume's only 446,000, but look how tight this chart is. See where it is relative to the 3-day exponential moving average and the 6-day. It's trending up. This is the 18-day or 18-period exponential moving average. AMKR, same thing. The 3 is above the 6, and here's the 18 down here. Volume has been good moving up. It fell off a little bit on Friday. Let's look at the volume on AAOI. You can see that it fell off there too, but yet the stock continued higher. On these stocks that don't trade a lot of volume, if the demand is heavier than supply, or any stock for that matter, or ETF, if the demand is heavier than the supply, whenever it pulls back, buyers are going to step into these stocks. AOSL, this is the one that only trades 160,000 shares on average. Hudson, only trades 382 on average. Now you can see that it got up to $8 and pulled back. I have left this stop at a break even rather than moving it up to the 1R level. And the reason I did that is this stock is a pretty loose stock. It's an inexpensive stock. I want to give it some room to breathe. On Friday, it looked like it may break down, but it didn't. Notice that the 3 is still above the 6, and both are above the 18. So the trend is still up. Now, if this comes down and closes through the 6, I'll probably get stopped out on this stock. And then Light, this is the stock that I have the fewest number of shares on, only 175. And we'll go back and look at the spreadsheet, but I believe it's the most profitable stock. Now, it's achieved the 1R level, and here's my next target. It's almost there. If I get up there, I'll move the stop up and just follow it up. So that, well, this one, let's point this out. Here's a 3 and here's a 6. They're all uptrending, trending up based upon that moving average. Now let's go back and take a look at that spreadsheet. Don't pay any attention to this chart. It just happens to be up there. Okay, so let's go back. See, I only have 175 shares of this, but it is up $726.25 already. So you don't have to have a lot of shares to make money if you get into these stocks correctly. And that's why we're using the impulse reaction method, or I call it the IR method. You don't buy the impulse, you wait for the reaction, and then you get stopped in on the trade going higher. That's it for today. I just want to review this. The add-ons have been updated. So if you do your update, you'll have the same data that I do. Another thing, a couple of people said they didn't get the PDF the other day, but I sent it out twice with 2 different email addresses. So your provider is somehow stripping that PDF out. So let me know if you don't get it. If you aren't getting the PDFs, I'm going to have to figure out another way to deliver them to you. Thanks for listening. I'm sorry. Thanks for living too. But thanks for listening. Have a good weekend, and I will see you on Tuesday. I'm actually doing a roundtable on Monday for the Insider Club, and I'm going to talk about my plans for that, rather than trying to come up with new techniques all the time, which I've done for 17 years, if you can believe that. 12 times a year. Not new techniques all the time, but a rehash or a revisit of a process. I'm just going to start educating people about what to look for in a trade. And it's going to be, I haven't quite decided how I'm going to do it, but this is a PDF which I created, and I'm going to do something like this. I'll have a weekly chart over here with the fundamental data. On the right side, I will have my IR chart, and down here, whatever technique I'm using to locate a particular stock. But you can see on a weekly chart that this is NVIDIA. This is the second stage of the life cycle of a stock. It's very strong, moving up sharply here. It moved up on earnings. It could be a climatic run, but it's really too early to tell that now. And then this is going to be a daily chart here, looking for entry points based upon the IR method generally. Now, who knows where this will go during the year, but I just want to do something different, use the tools in HGSI, and get the most out of them. The VPA stuff is tremendous in my opinion, and so is the VPOC, and other aspects of the program are great. So going forward, I just want to send out a few charts a month, or it depends on how how the market is looking, and then at the end of the month, we'll have the roundtable to review them. So, thank you for listening. I'll probably see some of you online Monday.